Good evening. Today's report focuses on the tax computation of Mr. Daichi Mimura for the year of assessment 2025. The objective of this report is to explain how each source of income is identified and determined in accordance with the Income Tax Act 1967 and the current Malaysian tax rules. This analysis ensures that the tax computation is accurate, compliant, and consistent with the Malaysian tax legislation. Now, let us begin with the determination of a resident status, as it is the foundation for deciding tax treatment and applicable rates.
Resident status is important because only a resident individual enjoy progressive tax rate and personal relief. Under Section 7 of the Income Tax Act 1967, an individual is considered resident if he stay in Malaysia for 182 days or more in a basis year. From our analysis, Mr. Daichi was resident in 2031, 2033 and 2035. But not resident in 2032 and 2034 due to insufficient day. For year assessment 2035, he stayed more than 182 days continuously, fulfilling the Section 7, Subsection 1 and Subsection A. Therefore, he qualified as a resident and is entitled to deduction, relief and a scale tax rate instead of the flat non-resident rate. This status will affect a subsequent competition.
So, does he qualify as a resident?
Employment income is taxed under Section 13, Subsection 1. It includes salary, bonus, allowances, benefits in kind, and value of living accommodation. Mr. Daichi received monthly salary of 9,800 ringgit, bonus, entertainment, and travelling allowances. Certain items such as travelling allowance up to 6,000 ringgit are exempt. Benefits provided by employer like car, driver, gardener, furniture, and leave passage are also taxable under Section 13, Subsection 1, Paragraph B. Housing benefit is computed using the lower of 30% of cash remuneration or defined value method under Section 13, Subsection 1, Paragraph E.
After deducting all allowable expenses, the statutory income is 176,460 ringgit, which will be included in aggregate income.
Start with net profit from the accounts and make tax adjustments. Non-allowable expenses such as depreciation, private drawings, and non-trade bad debts are added back. Allowable items like repairs and promotional expenses are deducted. Capital allowance replaces accounting depreciation for plant and machinery.
So, after adjustment of 205,000 ringgit 630 and deduction including capital allowance of 100,000 ringgit 820, the statutory business income is 45,310 ringgit. Sorry, miss. Alright.
Mr. Daichi is also a partner in a partnership. Partnership income is computed at firm level first, then divided among partners according to profit sharing ratio. We adjusted the net profit by adding non-allowable expenses like depreciation and private benefits to partners such as salaries, interest on capital, and drawings.
The partnership income was adjusted to a divisible income of 140,310 and allocated accordingly, giving Mr. Daichi a post-capital allowance share of 64,873.
Sir?
In
industrial building allowance is granted for qualifying building expenditure used for manufacturing. The factory building cost including architect fee and installation amounted to 833,000. However, only 85% qualified because non-qualifying portion exceeded 10%. For year assessment 2025, initial allowance of 10% and annual allowance of 3% were claimed, leaving residual expenditure of 616,003. For heavy machinery, site preparation cost exceeded 75% rule, therefore it is not qualifying expenditure. These allowances reduce the adjusted business income accordingly.
IBA is granted on 85% of the factory building cost, while heavy machinery costs are disallowed, reducing the adjusted business income.
Sorry, miss.
To compute tax payable, we combine all statutory income business and employment, each 45,310 and 176,460, rental and royalty after exemptions. After deducting approved donation and personal reliefs such as self, children, EPF, insurance, medical, and lifestyle, the chargeable income is 255,317. Using resident tax rates, tax on first 250,000 is 46,900 and balance at 25% equals to 1,329.
Therefore, the income tax payable for year-end 2025 is Rm 30,999. This shows the importance of proper relief planning to reduce tax burden.
Through this case of Mr. Daichi Mimura, we learn how Malaysian tax principles are applied in real situation. Proper documentation and understanding of exception help taxpayer optimize liability legally.